Welcome to Momentum Monday. Today's July 26th, 2020. Howard, how's your summer so far?
It's already August. It's going too fast. First
Very-
quarter was a disaster.
Yeah.
COVID slowed things down. And for some reason, the last few months have been just flown by. What about you?
Kind of the same. I mean, I played some volleyball for the first time in 5 months on Friday with a small group of people. So I guess
On Nintendo or on the beach?
on the beach.
Nice. Are
Yeah.
you going to get tested?
For what? Well, if I have to, I will.
Was the beach crowded?
No, it was a small group of people. No, it wasn't that crowded.
All right, let's hit the markets. Tell me what you see.
Let's see. I mean, the main thing that is impacting the market right now is earnings season. It has just begun about a week ago or so. And coming this week, we have, I think, about 500 or 600 companies reporting, and some of them are with substantial market cap. We have Google, Apple, Amazon, Facebook, Spotify, UPS, Shopify. So a lot of tech companies report earnings this week, and obviously considering their weight in the indices, they will have a significant impact on the way the Qs trade, the S&P trade, and on short-term market sentiment.
Mm-hmm.
My educated guess at this point is that whatever gaps we see in those earnings, in the big tech earnings, will most likely be faded. And if they gap up slightly, we might see just sell the news, people taking profit, and just that gap will probably be closed. And if we see a slight gap down, I don't really see a lot of downside follow through. Maybe most of them we'll find some buyers near their rising 50-day, just like we saw with Netflix. So we saw like a slight gap down and then a little bit of follow through on the downside, but yeah, the buyers are stepping up near the major moving average. You can see when the stock is in a strong uptrend, the first pullbacks to a rising 20, 50-day, they always find some buyers. And this is where many short sellers also cover. So this is the big thing going on. And the other thing that I wanted to point out is that currently you can see how in the past week and a half, the relative strength line of the Nasdaq 100 has started to decline.
Mm-hmm.
So there is a slight rotation. I mean, nothing significant, because it's normal when we're in an earnings season and coming up with such high expectations to see some choppiness and range bound actions. So I wouldn't be surprised if the Nasdaq 100 just kind of consolidate between 240 and 270 for the next month or so, just digesting all those gains from the March lows.
Mm-hmm.
And in the meantime, it will be really interesting to see if there will be a rotation into some of the sectors that would benefit from the reopening of the economy. Because, I mean, you've been in San Diego around, and you see how restaurants have been allowed to take a big part of the street, and many of them now have even more tables than they had before. So, and this is why last week probably we saw quite a few restaurant stocks starting to kind of perk up, and most of the market was down on Friday, but restaurant stocks as a group, they did really well. And even though the relative strength is horrible on most of them, we started to see some of them just try to break out and definitely going against the trend. So if there is a rotation into the alt economy sectors, I think this will be the beginning, will be the restaurants, because it just makes the most sense.
Yeah, some of the malls in like very urban areas are allowing people to eat inside the parking garages of all places. So, I mean, it's getting desperate out there, but create, the desperation for revenue at some of these places, not the McDonald's, but at the malls.
Yeah.
I continue to, the housing, it's, baffling to me, but I don't try and fight the tape. XHB is the housing.
We've been talking about it for the past couple of weeks. Definitely one of the new leaders, for whatever reason. I mean, probably maybe related to that infrastructure bill that Biden mentioned. And I know that Trump is also for infrastructure. So maybe it doesn't really matter who wins. Infrastructure stocks will probably benefit. And also remember that, I mean, a super big macro trend right now is the decline in the US dollar. And one of the few ways to protect the purchasing power of your money is basically by owning the stock markets, gold, or a house. Because look at the US dollar. I mean, it's just starting to accelerate. Obviously, it's not going to be down every week. There will be some bounces along the way. But let's take a look on a weekly. This is a pretty bearish.
Yeah, I think there was a lot of macro people that I really like. That's why I don't love macro as a general way to invest my personal money in the stock market, because I'm not big enough to think. A lot of people in the macro expected an explosion in demand for the US dollar before the deterioration. And of course, they got part of it right, the deterioration. I'm not so much scared yet by it as it seems obvious. But if you look at the trends that matter, and they've been going on a while, right? I shared on my blog today, Bitcoin, gold, Ethereum, collectibles, and I guess you could say housing and stock market after that. I mean, the easiest to talk about are housing and the stock market. But if you look at gold.
Exactly, yeah.
If you look at gold versus the S&P for the last 10 years, it's killed the S&P. If you look at Bitcoin the last 10 years, it's killed the S&P. So people are reaching, as my friend John Street Capital stated on my podcast, is that people are going further out on the risk spectrum. So, everybody's bragging about the stock market and their gains. And if you're in the right stocks, don't get me wrong, they've been spectacular, but gold, Bitcoin, and even now Ethereum for the last 10 years has just crushed the S&P. And now they're creeping up themselves. Gold having a back-to-back phenomenal years.
So maybe you don't mean the last 10, maybe in the last 20, because in the last 10.
No, the last 10 even. Last 10, gold is just.
Well, look at this graph for the last 10. Gold.
Well, it hasn't killed it. It's been about equal, but Bitcoin for the last 10, it's killed it. I mean, not killed it. Sorry, last 20. Last 10, it's about the same, Ivan. I put it up on my blog today, and Bitcoin and Ethereum have trounced, and collectibles have trounced the S&P, from collector cars to paintings to etc. So wealthy people are reaching further out on the spectrum, as are speculators, as this dollar trend kind of accelerates, this lack of trust or this money printing. So, when you look at the NASDAQ over SPY, which I've been saying, I don't know, forever, is if you're going to invest in stocks in a zero interest rate environment, you've got to go further out on the risk spectrum. It's not all these people that are talking about tech stocks that like they think they're so genius. This is just a massive flow of money to risk. The question that you and I are trying to figure out weekly is how aggressive to be. And I think you summed it up for the next few weeks. Earnings control this. And maybe there's a rotation, but if I look at where I'm going to rotate into, if you're trying to think one step ahead of the market, it looks like materials and industrials and maybe healthcare.
I mean, healthcare has definitely been strong. It's been one of the leaders lately, but
yeah, I think there's a lot of as we said last week, it's a lot of constructive action, but it's also not a horrible time to be defensive.
Well, it
So,
depends on the time
I'm
frame.
combining the two. The good stocks have had great runs, from Shopify to Twilio to Spotify to the FANG stocks to the NASDAQ 100. And so rotation is good, because it means money's staying in the market. But, you know, there's some things at play. You know, Trump came out and banged the drug companies on Friday, and so there's, everywhere you go, there's kind of landmines as they play, you know, whack-a-mole with trying to keep, you know, trying to stay one step ahead of this election. So the big trends, you get psyched out, have truly been in these really edge case areas of the market. And I think gold is really starting to show, combined with these hard assets and homes, is really starting to show that people are getting a little fed up.
Yeah.
And it's kind of accelerating. And you may see, I think this is a good one, Ivan, here, emerging markets. You may, with the weak dollar, start seeing strength here, no?
Yeah, I mean, definitely. There's something we need to be paying attention to. Obviously, this is not the best vehicle, EM, because
No.
there's quite a few Chinese stocks in it.
I think you do it the same way as you would play the US technology stocks in emerging markets. If you look at Tencent, it's exploding higher finally. Alibaba exploded higher out of a base.
So what's your take on China in general? There seems to be,
you know, other than the big companies, you know, there's just, you know, it's hard for me to trust it. You know, I mean, I'm all for a bit of a digital wall is the way. So, you know, a smart leader that was fighting the current battles would make it much tougher for Tencent and Alibaba. But the battle is going to be India. You can see Facebook, everybody's investing in India. Microsoft, Facebook, they're making their bets.
Yeah.
They're making their bets there because they're fighting with China. So it's enemy of my enemy is my friend. You know, it's, you know, India blocked TikTok. So, you know, you can see, look at that nice move in the Indian market. So, you know, I expect there's a lot of resistance there as they move into this, you know, 2-3 year grind of consolidation. But I still think the best way to play India is through US companies. But, you know, in emerging markets, if we look at Latin America, we look at Meli, which has been the dominant way to play. That's like playing Square and Visa and eBay, all huge names in the US in one stock. Okay. So that's kind of like the e-commerce way to play there. And then Stone is the way I'm playing it recently. Hasn't really done anything for a couple of years, but I think if the dollar stays weak and, you know, Latin America doesn't fall away, this is a leader. PAGS is another one, PAGS. And then, you know, the Interactive Brokers of Europe that I've talked about forever is XP. And, you know, it's right there at all-time highs. So I think you stay out on the risk spectrum if you must, and keep your position sizes smaller and maybe adjust how much allocation you have to stocks. That's the way I'm playing it still, is chasing the higher beta and sticking with momentum, but just keeping my allocation to stocks lower. You still have high cash, no?
I'm relatively high cash, but I'm definitely active intraday, and earnings season is one of the best market environment to be really active.
Yeah, I go quiet. You kind of go more active. Swing traders really delight in this.
Yeah, that would be a reasonable conclusion. But in general, if at this point we need to be paying attention to the potential sector rotation, and as I said, if there is a rotation into the alt economy sectors, which hasn't started yet, I mean, so far what we're seeing is just one day wonders, one day like big moves and then fading. Like we still haven't seen something that we saw in early June when all of a sudden small caps outperformed for a few weeks.
They're consolidating nicely considering the gains off the bottom. So again, it's constructive, but I just don't have, airlines still like, well, it's down 80% their traffic. And if you look at SPG, which is kind of American culture, high-end malls, no lift, right? Like
Yeah,
none.
looking
That's,
pretty bearish,
that's
yeah.
scary. So yes, we have e-commerce, Shopify, these digital companies are doing great. But if you look at the true underbelly of like old America, it's awful. You look at SPG and you go, that's top of the top. And you go back to a weekly, and that's just, I mean, you have to understand that underneath, if you look at airlines and you look at kind of land-based restaurants that aren't able, like Chipotle's or Domino, to go full digital. I mean, this is not easy. This is a dog eat dog and winner take all kind of market, and that's on top of the fact that you already have this wealth disparity, and the rhetoric, the wall of worry, as we've talked about for months, is as big as it's ever been, but the dangers seem to be as big as they've ever been. So invest accordingly. I'm going to leave it there and keep it simple this week. But I for my strategy, my style, I'm more in leaning towards cutting my losers extra fast, and through earnings at least. It seems like the market's giving. We thought, let's all be honest, we thought, Ivan, that this was going to be a shit show this quarter, and now time is here. And the market's giving most of these companies a break, or just taking them back to where they were 2 months ago. Oh. When if you ask people in April after the rally in May, people are saying, oh, wait till third quarter. Well, here we are in the third quarter. And, we may be in this for another year, and stocks are acting as if they're getting a pass. So I think that's why you're seeing gold, Bitcoin, Ethereum, housing kind of spark, especially with zero interest rates. People starting to think that these checks may be helicoptered in for a while. And I think the argument now moves to, should it be the government handing out this money, or should it be universal basic income, or there should be the way the government is packaging the stimulus? So I don't think this has all the earmarks to get bad. And that's why, as much as I'm constructive on the price action, page 10 is looming. And, and on page 10, I mean, the reality that we may not go back to normal for another year or 15 months. You're getting used to being in your apartment and living, you know what I mean?
I mean, I guess most people are.
Yeah.
But the main thing that you said that I think is kind of important is that definitely elections are coming up, and we might see an impact on healthcare, biotech, and all of the big tech, because they're going to talk about them, because big tech has become so powerful and so big and so profitable that the politicians are definitely going to talk about it. So,
but you take down big tech. One thing to take down energy and banks, you take down big tech, and then Trump's talking point of, the markets goes away. And so, you keep going after Facebook, Google, or Amazon, whether they deserve it or not. And I would probably say, blame both sides, Obama, for not stepping in about the banks and big tech. You take 20% off those, you take 30 to 40% off the market again, because the way those companies spend and the way those companies, it's more than 20% of the market. So it's kind of a catch-22. Like, we've created this monster. And so I wouldn't be surprised, I've rarely owned gold. I own it. I've rarely owned, cared about housing. I own more houses than I thought I ever would. I am in the collectibles business as kind of a market maker with Rally Road, and crypto, through Robinhood and eToro. I wouldn't have thought I'd be so, bullish, because I don't like the implications of Bitcoin and Ethereum for the economy that we're in right now and the trouble we're in. Not a great time if those are really going to be the future in the environment. There's a lot more chaos ahead for those. So, but constructively, if we look at, the markets, you don't see anything horribly wrong here.
No, I think most likely just a range-bound action for big tech and for the main indices. And slight potential to see continued strength in emerging markets, and maybe solar.
And then just to end on a positive note, I mean, if you follow the leading stocks, they're not the stocks that everybody owns, like AMD. I mean, pull that up. I mean, we try and talk about momentum, so I will end with, there is some stuff working. I mean, that is working. They are kicking Intel's behind in terms of their speed of chips is for the data centers and for gaming. NVIDIA, correct. You have Activision, the gamers, all breaking out, ATVI. Zynga, ZNGA, Take-Two. So again, it's hard if you're just a momentum investor and don't care what the company does, which I used to be, right? I used to be comfortable just owning a basket of momentum stocks. There is, if you look at DXCM, Dexcom, there is continued strength, Regeneron, REGN. So again, very small pullbacks after huge runs. So, looking beneath the surface for new names, if you just look at the momentum list, there's a lot of constructive action. And then, there's a lot of froth too with SPACs. Every day is a different SPAC. So, the market wants supply. The banks aren't giving it to them. And, my takeaway is creative promoters / entrepreneurs are creating these SPACs. And so, I think it's positive, but it's also, you got to be careful because this is a lot more supply and entrepreneurs are look at this Nikola one, huh? That's incredible.
Yeah, nothing surprising.
And they spun that together in like 3 weeks. I mean, you got to be really careful. So I'm saying Nikola can look a lot like these high beta stocks if we don't get this in check, right? Tesla seems to have put in a major top on that run to 1800. Now, if we're at the end of, the 1999 type easing, that was the top. If we're just getting going, and there really is a case that we could just be getting going on the easing, as the market gets politicized, we'll take out that $1,800 in a week or two. So, there's something for everybody, I guess. All right, buddy.
All right, Howard. See you next week.
Have a great week.